Cycles are, yeah, definitely a topic that you need to make sure that you understand thoroughly, because yeah, it just it makes it's the crux of auditing. The crux of making sure that your financials are accurate, complete, and authorized and occurred. And every single transaction that's there has occurred, just to make sure that the reporting is reliable. So that's why I'm saying that cycles are NB, 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 NB. All right. So cool. With that being said, maybe we could just start. Remember last weekend we were looking at computer controls, and I just asked you guys to please know your application controls and also your general controls. With today's one, it's a bit different because it's more of manual work that's being done by people. So let's start. The accounting system, right? So with the business cycles, as I've mentioned, there's certain processes that are being done and tasks that are being done, records that have been stored. Why? Because we are trying to make sure that these financial records that we have are reliable. So there's someone who will assemble those records, there's someone who will analyze those records, calculate, classify, so that at the end of the day, we have our financial statements. All right. And what I've just mentioned in terms of assembling, recording, analyzing, and calculating, classifying, all of that, majority of those tasks are being performed by individuals, which are people. They carry out those procedures. For example, for a person to get a sales invoice, there's someone who will be working along with that system. Yes, as I was saying that something is a sales invoice. There's someone who's capturing those details for us to end up paying a sales invoice, and someone who's overseeing that whole process. So there's people involved, right? And the 5 business cycles that we have that even transition into our systems as follows. They are, you can see them here. There's the revenue cycle, the revenue and receipt cycle, the acquisition and payment cycle, the inventory and production cycle, the payroll and personnel cycle, and the finance and investment cycle. So all these 5, they're the core 5 systems that we will be looking at, and they are very important for your business cycle because they end up impacting your financials. Okay, right? Please bear with me. I'll be talking a bit more, just trying to cover the theory, and then it will be your chance to start talking. Let's make it interactive if you can. Okay, thanks. And within these cycles, as I've mentioned, there's certain functions and there's also actions that are being done to make sure that the procedures are followed. Why? Because at the end of the day, we have this thing that we have to look at. We need to make sure that this is reliable. Your consolidated financial, this is your balance sheet. So there will be assets there and your liabilities. And then you have your income statement. So it's your revenue there, cost of sales, your costs, your finance costs. So all these line items, they fall under one of these cycles. All right. And you will see them as we go. Okay. All right. So on activity 1, we're just going to discuss it. I don't want us to, it's not a Q&A, but let's just look at this because it's part of your notes. To say that the balances in the statement of financial position and the classes of transaction in the statement of comprehensive income relate to the following. So from that income statement, as I was saying, you can say, all right, from the income statement, I can identify that we have a business cycle called the revenue and receipt cycle. Which line item does it affect in my balance sheet? Which line item does it affect in my income statement? And I'm trying to build up so that you can write your notes accordingly so that it makes sense. By the time that you give controls, by the time you give risks, by the time you give weaknesses in the system, you would be able to link or trace whatever that they'll be asking you to these line items, to this cycle. Remember, I think it was last session whereby I was asking you guys what could go wrong? What are the risks of a certain thing that we were looking at? And I was forcing you guys to get into the habit of answering as if you're in the exam. And I was saying that you can't say just the risk and not like just going around the bush, just mentioning your risk without being specific about the line item in the either in the income statement or balance sheet that this risk is affecting. Because as I'm saying that controls, you need to end up being able to trace them to a cycle and also a line item either in your balance sheet or income statement. Why? Because at the end of the day, we have these controls to provide assurance that these financials are accurate and complete, if you get what I mean. So it's important that you do yourself a favor and just have this table to say, this is the business cycle. These are the line items that I know under balance sheet and income statement affect. Then you build on it to say, these are the documents, you just have it here to say that these are the documents that affect this line item or this line item or that line item. These are the risks that would happen if something go wrong. Then you say it. These are the controls. Then you would have a full picture of a revenue and receipt cycle as a whole relative to these line items in the income statement and balance sheet. Then it's easier for you to make sense of your notes, easier for you to also answer the questions in the exam. Okay, so with that being said, so line items that are within the revenue and receipt cycle, it's your account receivable and your cash. 2 line items, okay? And we have an account receivable because of what? We would have made credit sales. Am I correct? Yes. So I would have made credit sales. Within those credit sales, there's certain things as remember management accounting, if you do management accounting or accounting itself, to say that if I have sale, there's chances that something might be returned. How do I deal with that with sales return? It's not only with the GL accounts, but it's also the documentation behind it, right? So the sales returns, hey, there's certain times where even with you can see shops could say that there's a discount when you buy 2 for what or whatever. What actually happens with the documents behind whenever there's a discount allowed? Credit losses, interest received. All right. Whenever you're putting sales on credit, you charge the people on whatever that they buy on credit. So there's an interest that's been received. This line items will go along with this account receivable. Then that's why I'm saying that you will have your own table on the side to say what are the documents under credit sales, under sales return, so that they become second nature. The time that you get into the exam, you know them by head. Please do know them by head. Then there's cash and cash equivalents. These are your cash sales. So it's cash sales. It's you coming buying with cash and you didn't see. And then okay, there's a bit of echo. Rebecca,
Hello.
if you don't mind, can you maybe mute yourself because you're currently on video mode. So can you? Thank you. All right, cool. Then there's acquisition and payment cycles. acquisition and payment cycle goes along with the line item under balance sheet would be your accounts payable. Under this, there's both cash and credit purchases. And we know there's gonna be purchase returns because normally purchase returns goes with sales returns. I'm just saying, think about it. It depends on which side of the business are you in. So cash and credit, then purchase returns. There's also discounts that you might be receiving. As I'm saying that it's almost revenue and acquisition cycle. It's always dependent on which side are you. Are you the person selling? And if you are selling, you must also think the person receiving those goods, how do they behave? So that's what I'm saying. It depends on which cycle, which side of the cycle are you? Are you the buyer or the seller? Or even if you're both, but just be able to swap those heads. And then there's interest on late payments. Yes, as I was saying, if you are buying on credit, they're going to charge you interest. And if you pay late, they're going to charge you. And then expenses, okay? Then there's the inventory and production cycle. The balance sheet line item that is being affected, it's inventory. And the cost of sale is on the income statement. It's straightforward. But there's so many things that we can speak about inventory. And you see it on the processes that they might have and the documents that are involved. Then there's payroll and personal cycle. Line items in balance sheet, those it's your bank and cash. Because hey, you pay your people with cash, can't pay them credit. Unless if you're using overdraft, but that's another story. Then there's accounts payables. These are your accumulated leave, your unclaimed wages, your SARS, your pension funds, medical aid, all that jazz that you see on your salary statement. And then in your income statement, there's wages and salaries. Then it's the net of all of these things that we were looking at. Then last cycle is the finance and investment cycle. They affect your share capital, your reserves, your long-term. It's how you fund your business. It's your long-term loans, your PPE, the type of investment that you make, property, plant, and equipment, and investments that you make. And income statement with the investment that you make, it's either you've got dividends received or paid, interest paid on the loans that you have made, your profit and loss, profit on sale of asset, these assets, you know. So it's all of those things. So try to be able to think these things. When I'm saying it, you're like, oh, okay, fine. But then I think the trick in cycles is understanding the documents involved and who does what and what could go wrong. Then if you could answer those questions of saying what is the cycle, which line item is affected, what documents are involved in this cycle for this specific line item. After that, you're like, who does what with those documents? And then you're like, okay, fine, what could go wrong if this person doesn't do this procedure? I'm telling you, you will then have a full holistic view of what cycles actually involve. Okay, so that's business cycle. As I was saying, that I felt that last week we might as well just end off with the computer control, so that a business cycle, what I just covered now, gives you a base of the first cycle that we'll be looking at today and all the others that we'll be looking at as the weeks pass. Cool. So revenue and receipt cycle. So revenue and receipt cycle, remember from that table, there's the balance sheet portion, and then there's the income statement portion, and we've spoken about the line items themselves. With revenue, I think what's important is to ensure that whatever transaction that we say that happened really did occur. You don't want to get into a situation whereby what you are saying didn't actually happen. Reason why am I saying that is because you might get into a situation whereby you are overstating your sales because of fictitious sales transactions. So the most important thing there is occurrence, omission, accuracy, and others. So those objectives that I'm speaking about is the same ones that we looked at last week when it came to the controls. Okay. So guys, the cycle and the activities and the functions within these cycles, they are in this textbook. Maybe if I could ask you guys, do you guys have the Jackson and Stent textbook, if I may ask?
I have a soft copy.
Okay, if you don't mind, please send it to the chat here. I think you should be able, so that we can, maybe in certain instances we might be looking at it. But then thank you for responding. Okay. Thank you. So the textbook describes all the activities and functions within the cycle that you can look at. Very important that you know them. It is quite long, I know, but it's important that you know the documents involved, you know the functions, because you will see as we look at the questions, they do look at it. What is this one? It's not a good one. Sorry. All right, so I'm just gonna be looking at certain things like this. Yeah, so you will have your cycle, your line item that you're looking at specifically, then you have this function and have the document. So function is normally either a department or whatever anchors the actions that follow or the procedure. So what I'm saying is that there's a department called the order department, and the documents that are within this department, if you're making a sale, is that the price list. If you are selling products, you have to know your price list. They need to be there, because guess what? Every time those who are doing MANEC, you are multiplying a certain unit with a selling price. So that selling price, you need to now think about it. Oh, in auditing, that means that this selling price. So what I was saying is that, yes, what was I saying? I was saying that with something that you're selling, if it's a jacket, there's the number of jackets that you will be making. Okay, fine. There's different types of jacket. There's a sweater, and then there's the formal jacket and a casual jacket. So those are your different types of products that you're selling. And all of them, they've got different selling prices. So if you are in the company of selling those jackets and sweaters, you would have a price list for each product, right? And that forms as part of your documents. So I'm just trying to make sure that also don't cram. Please don't cram. Try to make sense of all the documents that you have so that you can be able to know what to do with those documents when you're writing the controls. Okay. So under the ordering department, there's price list, there's the customer order. And the Welleng would be making an order of 5 sweaters. So there's a document that goes with that customer order. And then there's also a thing of, if you have a big company, you'd find that sometimes the company would be trying to make sure that they have the end-to-end cycle where they supply to themselves the raw material of whatever good that they have to produce. So same thing with the jackets. There might be a certain department that actually sells the material to the other department that makes the sweaters. So that would be internal sales order. So I'm just trying to make sure that under order department, you can understand certain documents. The list is quite long, but these were like the first 3 that they mentioned given this activity, right? So what I'm saying is that once you do more questions, try to fill it up. There's certain things that you will recognize as, oh, I didn't know about this document. You put it in, all right? And then there's the warehouse. Sorry for that. Warehouse it's where you secure your inventory. You buy your material, as I was saying, the material comes in. So there's the picking slip, there's the delivery note, because you'll be ordering from another company. Let's say you're ordering from China, then they ship them, then they bring them. There's certain delivery notes that you have to sign. There's the back order note, there's the picking slip. So try to visualize a warehouse, or if you haven't been to a warehouse or you don't know what an ordering department is, guys, there's YouTube. Try to see the process flow so that you can be able to know these documents on top of your head. It will make sense. If you do it that way, you'll be like, oh, okay, so this person gives this to this. What are they using to show that that task has been done? Those are your documents that you need to be aware of. There's invoicing, these are the functions within revenue. No? So there's invoicing by virtue of that function, there's the invoice itself, which is a document. There's recording of the sales and raising debtors. And when you're raising debtors, it's when you have credit sales, because you're saying that these people owe me. So with recording those sales, what are the documents that happen? Think about yourself. If you have a shopping account with whatever, Mr. Price or wherever it might be, there's a certain statement that you get every single month end. That statement is part of the controls that they have. So documents that account statement there, and then try to also visualize on the account statements that I have, what are the relevant things that they put there. There's dates, there's trying to show the balance, what you've paid. You get what I mean, your account number. Those are the things that, trust me, you will use when you are answering your questions. You will see as we go some of the questions that we're going to do. Cool? Then there's goods return voucher. There's credit notes. So know when is a credit note issued. Know when a goods return voucher is actually issued. Then there's receiving and recording payments from debtors. So now, darling, it's month end. I got my statement. What do? I make payment for what I owe the company. If I have credit sales, if I'm taking on account. So there's remittance advice, there's remittance register, there's receipts, there's deposit slip, because whenever I'm making payment to that specific Mr. Price or so, there's a receipt that they get to show that there's proof of payment. So try to make these documents or these certain functions relevant to your life so that you can be able to understand the questions and know how to answer and not cram the theory, because if you cram it, trust me, it will catch you out in the exams. And then over and above the fact that Ndawaleng is making these sales on credit, there's credit management. There's someone who needs to ensure that when I make an application to have an account with a specific retailer, I meet certain requirements. So hence the credit application form. And then you must also think about it that, okay, fine, when I apply for credit, what do they actually need from me? And those are like, they'll say your salary statement to see if you can afford this, your bank statement to see that where would they be taking your money from, and also to see the activity. Are you someone who's always late on payment, or are you someone who doesn't actually have the money? Or who's just careless in terms of spending? So that's like affordability checks. There's the thing of ID. Nowadays, there's a whole thing of fraud of people just opening accounts with your own ID. So it's one of those things where you see, you can speak a mouthful around it because you've probably experienced it. And if that's the case, that means that you can be able to discuss the controls around having this document. This is a nice one. Let's look at activity 4 before we go to the risks. This is where you guys talk. Or let's try, sorry guys, let's do activity 4. Okay, cool. So activity 4 says that the following are examples of an order form, delivery note, and text invoice. So these are 3 documents. Okay, please note these are 3 documents: the sales order form, the delivery note, and the text invoice that's been issued by company XY Limited for commodities sold by the company. All right. So let's look at the sales order form. So the sales order form, here it is. There's that number, there's the date, there's the address, and they're telling you to who, that person's address, and their account number. This person bought a stapler for 85 units for 28 Rand 60, and it gives you that amount. They bought paper, they bought also the pencil. They give you the subtotal and the VAT and the total. And then it shows that it's been authorized by the orders clerk. So let's try look at that first one, and then we'll go to the next document. I just want to make it one by one. So the question says that indicate which of the following information on the above documents demonstrates the objective control for financial reporting. So what I'm trying to say is that from that document, maybe mention some of the line items that you see here, and try to tell me what does it, why is it there? What is it trying to achieve from us having these things here, if you don't mind? So the objectives, there's occurrence, as I've said. Number 2, its occurrence, its accuracy, and complete. So let's use those ones. So from the sales order, which line items is trying to achieve either accuracy, completeness, and occurrence? Over to you guys. I hope you guys were listening. So I'm repeating myself that from the sales order and the things that I've mentioned, mention line items that you identify from here and tell us why do you think it's there? What control objective is it trying to achieve?
Okay, on my side, I would say it's accuracy. We have sales order to a specific customer. It's got an address and the stock that a client is requesting, the total amount, and we have a debit, order number.
Let's try this. Please, Kandeka, I'm on you. As I'm saying, try to mention a specific line item. Once you've chosen that specific line item, tell me why do you think this specific line item is there, and the control objective that it's trying to achieve. If you get what I mean, just say it in that way, not all like you said, address, this total, this. I need you to say, we have a total, or we have this because 1, 2, 3, and as a result, we are meeting this control objective, if you don't mind. So try again, if you don't mind, to just give me one line item that you identify, tell me why you think it's there, and also the control objective that we're trying to achieve.
Okay, I would say to have the specific customer name and the address. So for me, it's accuracy, identifying the person that this order is this order is meant to be, like which customer we are dealing with in this sales order.
Right, thank you. And then others? There's so many line items here, guys. Let's talk. Others, what do you guys think? There's so many line items here. Please mention one and tell me why you think it's there and control objective that it's trying to meet.
Yes, I was gonna say the first line item XL001. The quantity and the unit price are there so that you can make sure that the total amount matches up to that quantity times the unit price.
And why do we do that?
It's like an accuracy check to check that total amount is correct.
It's correct. So literally what you're saying is that the customer pays the correct amount, and as a result, you also get the correct amount in your bank account.
Yes, yes.
Yes. So that's how it works, guys. Like, don't look at it to say this is right. That's it. Right? Please hold, guys. I'm coming. We need to make sense of why they have certain things. So maybe let's look here. So the name and address of XY Limited on the order form and the delivery note is for occurrence. For occurrence, then the total amount, including VAT on the credit note, corresponds with the sales order. So it's one of those things where you should be able to talk as to why is it under accuracy, why is it under occurrence, and why is it under complete. Certain things like the date on the invoice to be recorded in the accurate period for the accounting record. So having a date, it helps you to know that for this month end of May, we made this specific sales order. So I'm hoping that you guys can see what I'm trying to say, that having a certain thing of saying that XY Limited issued out this sales order is to make sure that that sale order actually, issued out the sales order to the specific customers to make sure that that sales transaction actually happened. That's occurrence. Having a date, you're trying to make sure that all the sales for that specific period are complete. We're not missing anything. There's no cut-off issues. Cut-off issues are what? It's a thing of saying that something that you find that, oh no, the sale actually goes hand in hand with what happened in June. And you record it in, let's say, you forgot to record it for June and you're recording it now in July. So if your half year is June, that means that you understated your sales. And that could have been a difference in terms of the story that you're going to tell your shareholders. So I'm saying that having those things and having a thing of saying that on your delivery note, on your sales order, wherever it is, you have this specific number for that sales order. It helps you with having a sequence of the documents to make sure that everything is complete. I hope you guys understand what I'm saying. So look at this activity once more and try to see, why do we have a total amount that includes VAT? Why do we have the dates? Why do we have, there it is, the invoice number? Why do we have a signature, guys? There's a signature there. It's just to make sure that they're saying that this thing actually occurred. Someone came and reviewed all of this and said, yes, there was an order for a stapler, a paper, and a pencil. So all I'm saying is that things that we see on our statements, on invoices, sales order, they are not there to waste ink. They are there for a reason. Okay, so that helps you with understanding these documents, what information is there and why. Then once you know the why, you can then allocate it under this control objective. I hope I'm making sense. Do this activity. Try to do it with many other documents that you will be facing in different cycles. I'm telling you, you will be able to mention controls. You'll be able to identify weaknesses in a certain company whenever there's whenever something is missing, you'll be able to see they'll give you an invoice and there wouldn't be an invoice number there. You'll be able to know because you know an invoice. I need to see the VAT. I need to see the VAT here. I need to see invoice. I need to see date. I need to see address. I need to see which customer. Do you guys get what I mean? I need to see unit price so the calc is correct. I need to see the items that they're buying. So by the time they give you something, you'll be able to criticize. And that will show that you understand why we have certain things on the document. Okay, cool, enough said about that. So now moving into the next step. So that's the risks and internal control in the cycle. So now with this, we're trying to distinguish what could go wrong if a certain control is not there. Remember, a risk is what could go wrong if you don't have this specific thing. So the activity that I want us to look at is, yes, it's activity 6. Okay. So this is where you guys talk, and as I've mentioned, please participate. You rather guess in this class than in the exam room. I always say that's my principle. Practice now and then get used to answering the way that I would say that try answer this way. I'm trying to help you to practice to talk the way that you will write, because normally the way that you answer, that's how you write your answers in the exam. And then sometimes you will say that, but then I was almost there. No, we don't want you to be almost there. We need you to hit the nail and be straightforward and direct. That's why please bear with me when I'm trying to help you guys practice to talk the way that you would write in the exam. Cool, activity 6. So it says describe the internal controls that can be implemented to minimize the following risks associated with credit sales transactions. Okay, that's a bit of a mouthful, so let's try and break it down. So it's saying that for each of the risks that they will give you, tell us what controls would you have in place to minimize this. So these risks are what could go wrong. Tell me what are the controls you'll put in place to address this. And then number 2, it will say that after you've mentioned the control, because this is the risk, you mentioned, okay, darling, you would have to do 1, 2, 3 to minimize this risk. And then comes the part of saying, what is that control objective? Why do you think we need to do that specific control? So a control objective is always, why are we doing this? What are we trying to achieve? Is it accuracy, completeness, occurrence, all of those nice things that we just mentioned above. So now let's tackle it one by one. This is the risk. Goods may be removed from the inventory warehouse for fictitious or unauthorized sales. So now we are in a warehouse, and then there's a chance that what could go wrong in that warehouse is that the goods might be removed so that people can sell, makes unauthorized sales. So let's think about it. Most of the time you find that you go to a warehouse, let's say for Nike, for example, you get there and you're like, okay, fine. Can I need the specific sneakers. And then you find that the person there at the warehouse is like, okay, the warehouse price is 3,000. I'm making an example. And then you find that they're like, but if you meet me by the back door, I'll give you for 1,500. So that's a risk because you're at the warehouse and then the person selling can actually remove those goods so they can make this fictitious sale or unauthorized sale, because unauthorized, it's stolen goods, because the person will take those sneakers, go to the back door, they receive the 1.5 and not you as a company. So you are losing out. So how can we prevent this thing that I just mentioned where goods can be removed from a warehouse for fictitious or unauthorized sales? What is that control? And please don't give me, you can try maybe brainstorm first with giving me a textbook answer, but think about it. What do you think should be there to try to avoid what I just mentioned, the example that I just did? Naim, Retabile, anyone? Okay, Marika.
Somebody will have to check the orders that is actually leaving the warehouse. So it can be a specific person that is just there to check, or it can be the supervisor that is checking. Yeah.
Okay, and remember what I've said. Okay, cool. Let's stick on that. You're saying somebody must check. What are we checking? What would give you evidence that something is moving out, in and out of the warehouse?
Well, there must be, all the documents must be in place. So in other words, the order document, the delivery document, no, not the delivery, delivery document, because the delivery document you will take to the customer to actually sign off to say that they did get it. And the tax invoice must also accompany that. I hope I'm answering.
Yeah, I hear you. So now you're thinking about documents to say that, okay, so if I go into a warehouse to buy, or if something comes into the warehouse, what document would I get? There's a delivery note to show that there's something that came. So now you're thinking of another document that for it to go out, there should be a form of a slip or something to show that something is moving out, right? So now, hello? Yes?
The purchase order should match the delivery note.
Yes, there's a purchase order that needs to now meet that delivery note, because for anything to leave that premises, there's a purchase order, so the two need to be reconciled. Why are we doing all of this? So now you need to give me the control objective.
It's for occurrence.
Occurrence, right? Yes, to say that something like this actually happened. So I'm happy with that. So that's occurrence. So let's look here. So here it is. It says that the supervisor checks should be carried out by the warehouse to ensure that all the goods that are being picked are supported by a signed picking slip. So you guys are still correct to say there must be a delivery note. There must be a supervisor who checks this whole process. So you are correct by your internal control identified. And you are also correct by saying that we are doing all of these things. Why? Because we're trying to make sure that this transaction or this thing actually happened. I'm happy with that. Okay. Number 2, incorrect goods or quantities could be dispatched. So incorrect goods and quantities could be dispatched. Dispatch means being sent out from the warehouse. So incorrect goods or quantities could, so I bought something. This is where now think about take a lot. You've made your order, and then now out of the blue, they incorrect. It's either the number of things that you said you wanted, they didn't bring them, or they give you an incorrect good. Why? I mean, like, this is what could go wrong. What can a company like Take a Lot do to avoid or minimize this risk?
Well, they should match the invoice or the picking slip with the delivery note.
Okay. Okay. And why are we doing this?
For accuracy.
For accuracy. All right, cool. So let's look here. So they're saying on receipt of goods, a picking slip and delivery note from the warehouse, the dispatch clerk should check the quantities and the description of the goods against that authorized picking slip and delivery note. So with the answer being given, yes, you were spot on with the documents. You can take it a bit further to get a full mark by saying that what specifically needs to happen when they check. So you must say that the quantity and the description of those goods, because the risk said here, incorrect goods and quantities. So that means that that's something that they need to look at. So you use what the risk involves, which is the number of goods that are there, or even the description of the goods. So they must check that against the delivery note and the picking slip, and yes, accuracy of the incorrect quantities and also occurrence of the incorrect goods. I'm hoping that you guys get the gist of it. So let's look at the last one. We're not going to look at all 5. You can practice all of these things to start learning how to come up with the answers on time. Not on time, I'm saying correctly, and also know what specifically, who should do what. So you should say supervisor or the audit clerk, or be able to define that person and be able to also say what does this person need to do. Then thereafter, why should. So if you could answer these 3 questions, you should be fine. So now the last one, payments received from customers may not be deposited in the bank due to theft or carelessness. So the payments that Raleigh needs to make to this specific account may not be deposited in the bank due to theft or carelessness. How can we avoid this or minimize this risk? Think about it. How can we try to avoid a situation whereby payment that you're expecting to receive from customers may not be deposited into the bank because of theft or carelessness from your people?
I would say that, well, one of the things is that the frequency of deposits must be looked at. So depending on how big the amounts are, what daily, once a day, that the deposits must be banked.
So you saying that they should be, try to formalize your answer. So you're saying that we should monitor. So what are you saying? Are you saying that we should have a thing where we know how often do we deposit the money, or how often we do it, or how can we go about it? Try to also just make it full and complete, if you don't mind. Or someone can step in.
Okay,
Yeah.
so let's use, let's see let's say, for instance, it is a company that has a warehouse, so it will be big amounts. So yes, deposit daily. That would be the thing to do, I would say.
And then why would we do that?
It is for accuracy.
Accuracy, okay. Cool. Let's look here. Okay, so now look how long this is. All right, so they say people must, okay, a post must be opened by 2 people. All payments that are received in the post should be recorded in a remittance register. And a pre-numbered receipt should be made out for each payment that's being received. All amounts received should be banked daily. Remember why I was talking about frequency, like you must be specific as to how often this should be done. The remittance register and the receipts issued should be reconciled to the bank deposit by an independent employee. And then the bank deposit should be reviewed regularly and gaps in daily banking investigated by management. So you see why I was saying, like, we'll make it full. So it was only one, but there's still like other controls that are there. So this is normally in the case of the cash business, cash sales. So people always come and they pay and pay and pay. So now once we look at it, after all the cash has been done, 2 people need to open that post or that register. And then they need to now look at the receipts, which needs to be pre-numbered and the register, the cash register that they have. Then they must reconcile the two. Then the amount that is in there now needs to go be banked, and it must be banked daily, because you can't be saying, I'll bank it the next day. You can't run that risk. Then thereafter, someone needs to reconcile. After they've banked the money, the bank will give them a bank deposit slip. That bank deposit slip, you need to have an independent person who will take the deposit, look at the receipt that was there, and also the cash register. I'm just making an example, making it simple. It must be an independent person from the first two who did this whole thing, and also the person who banked. Then thereafter, on a regular basis, someone from management needs to ensure that they look at the bank deposit, and also if there's any gaps between, and if there is, identify it. Why do we do this? It's for completeness, to make sure that all the transactions that we've made for that day are banked, and whatever's in the bank goes along with the receipts that we have. They've got supporting documents. I hope it's making sense. So with controls, try to write as much as you can. Be specific of which document and which one and what to do with those documents. So if you want to say frequency of the number of times, be specific as to, is it daily, is it monthly, is it weekly? Especially when you're dealing with cash, be specific. So that's a take note of saying that with controls, be specific. We now need to think of what we just looked at in terms of a revenue cycle, but in a case of this was credit, the revenue cycle. So now we were speaking of manual things where people are involved. So now we need to look at the computerized version of this cycle. So also in your notes, you will have everything that I've spoken about in a sense of manual, but also take that same format that I was talking about, function, business cycle, which line items of the income statement, risks, documents, and also controls, and also have the objective on your side. Have all that in a column or a tabular format, but for manual, and say this is the manual part. Then do almost the same thing with the computerized cycle, and you will see the table below as to how you should put it for a computerized cycle. Okay, so this is what you have to go read. It's long. Good luck there. Let's look at the activity. So remember last week we were talking about application controls. So in this question, I think we can do it together, and then you guys will have to do 8, just to see if you guys looked at the screen aids and stuff. But anyway, activity 7 says that describe the application controls that should be present in a computerized environment to ensure that only authorized amendments are made to debtors master file in the credit sales accounting system. It's a mouthful what I just said, but basically what they're trying to say is that give us the application. This is in a software. This is a credit sales accounting software, and in that software or system, there's a master file. So a master file normally it will have all the details about my data. And now let's think about it. Inside this master file would be my name, my ID, my address. If it's a credit sales, that means there's also my credit application to show how much do I score, and all those nice things, my bank details, so that you guys can be able to either, if there's an EFT arrangement between us, it's a debit order, you'll be able to take the money. So there's those information inside this the data's master file. Sometimes it even has history of the things that you have ordered in that data's master file. So now they're saying that give us the controls that should be present to ensure that should there be any changes to what I just mentioned, the line items under data's master file, how can we make sure that those amendments means changes in their data master files, are authorized? And then they ask you also, mention things that could go wrong. It's a risk. Remember, I did tell you things that could go wrong, which are the risk if no application controls exist over amendments of data's master file for each of the control objectives. So now they take it a step further. They ask you at first, give us the application controls that needs to be there over this data's master file to ensure that any amendments are authorized. And then thereafter they say, tell me what could go wrong if there's no controls at all over amendments in the data's master file. And make sure that the risks that you say, you link them with the control objective. So now, to answer that, they say that the control that needs to be there over amendments made in the data's thingy. So the answer is it's in your textbook. Does anyone have the textbook now that could share these controls with us? So while Mariko is looking at that, let's try to then speak about the risk of what could go wrong if there are no controls like that. So one of the what could go wrong is that for occurrence, so they treat them separately, occurrence, accuracy, and completeness. So if there are no controls over the amendments, unauthorized and fraudulent amendments could be made to the detriment of the company. For example, a debtor's credit limit could be increased, allowing the debtor's credit facilities, which you can't be able to pay, right? So if we don't have controls over those amendments, changes that I was mentioning in that data's master file, we're going to have a lot of fraudulent situations that are happening with credit. For instance, credit limits would be increased, right? And then under accuracy, incorrect amendments could be made to the data's master file. For example, changing the postal address, resulting in the data not getting the monthly statements. Or you find that the amount in their account is incorrect. And then, this might be a challenge for the data. So try to see that, let's say for here, the words used here. Just going to look here, something that I've observed. Oh, God. Okay, please be cool. Yes, so I've highlighted this. We'll get to this one. Okay, cool. It's fine. So I've highlighted 1, 2, 3. Under occurrence, if something didn't occur, that means it's fraud. Under occurrence, it's all about authorization. If something was not authorized, it's unauthorized. So try to look at the keywords that you need to mention when you're speaking about risks. If something is not accurate, it's inaccurate. So if something is not complete, it's incomplete. So what I'm trying to say is that you can't speak of what could go wrong without mentioning these words. So always know that, okay, fine, if I'm talking about occurrence, I'm speaking about authorization and fictitiousness and fraud happening. I'm saying in terms of what could go wrong. So now you just have to take it a step further. I'm just saying in case you get a mental block as to your data's master file, I didn't touch that section under the textbook and they are asking it now, I'm freaking out. Don't freak out. Always think, okay, you saw how I was just saying, a data's master file, what kind of information is there? Okay, they're speaking about amendments, meaning changes to the information that's inside this master file. All right, so they're speaking of control objectives. what could go wrong if these control objectives are not met? Okay, occurrence means authorization and making sure something occurred. So that means that if something it didn't occur, it's fraudulent or fictitious. Okay, so that means that changes that would have made would have been fraudulent or fictitious, and then fictitious, and then that means that they are not authorized. So now they take it a bit further. So you say that authorized and they would have been made. So if you want to get that extra mark, you make an example of information that inside the master file. I hope you guys get what I'm trying to say. To say that try to make sense out of what you read, because cycles, it's a lot of information. It's a lot. Try to make sense out of it for yourself. Then it's easier for you to attempt questions, even if you haven't reached a certain section that you've read. Don't freak out. But if you cram, you will see problems. So even with accuracy, say accuracy, incorrect, the risk is that incorrect amendments will be made. But we need you to make an example to get a full mark, because everyone will say incorrect amendments, amendments not complete, fraudulent amendments. That's not something that will give you a full mark. You would need to take it a step further and give an example. And based on the information that you will have inside your master file. All right. Okay, cool. I see that Koketso sent it. Thank you. Thank you, Marika. Thank you, Koketso. Koketso, is this the... Okay, I'll just download it. Sorry, guys. Oh, it says it didn't download. Okay, cool. Sorry, if you just bear with me for a sec. Yo, good time. Okay. I hope you guys can see this. Thank you, Marika. Thank you, Koketso. Koketso's one, I'll just download it later. So, so let's go here in terms of what are those controls. And you see, guys, it's a lot, eh? Sure. It's a lot of them. But anyway, so they explain what a data's master file is and why is it important to maintain it. So they're saying that the integrity of that master file is very key, that it needs to be maintained. Access to that master file is important because you can't just give everyone access to it, because like I said, amendment to what's in that master file. Take the master file as if it's a storage of information about the customer. If you change it, it will alter what you end up reporting as part of your sales. And then, so they speak about how important it is about the, what's this amendment? So you guys will read there. So they say that controls will be primarily preventative, but they will be detective also. So like I was saying, they will try to prevent the risks that we just mentioned, right? Or detect them. And then these are the ones. So they say the activity record all master file amendments on a source document. That's a control. So now you take it a bit further to say that all amendments should be recorded on a hard copy master file amendment form. So for whoever it is who has access to this master file, they should firstly have a hard copy of a form. And you see, they even mention the form. It's a master file amendment form. So when you're giving an answer, just say that there must be a form that these people fill up. There's a specific, it's just like how we'll say a proof of payment or a physical address statement or whatever. But I'm just saying that be specific of the document that this person needs to fill, and it needs to be in hard copy. No verbal instructions are allowed. You can't just say, Balisa, go and do this master file amendments. No, it should be in writing on a hard copy called master file amendment form. This master file needs to be pre-printed. It should be sequenced. So that means it must have a number on top to say that it's master file amendment number 5. Okay. Then thereafter, this master file needs to be authorized. So it should be signed by 2 senior employees. Either it's a credit controller or a senior assistant who needs to sign this. After they've agreed, and before they just sign, because sometimes you find in companies, people just sign for the sake of it. These people need to ensure that before they sign, they've agreed the details of the amendment to the supporting document. So think about in terms of whenever you've moved, even with your bank, whenever you've moved and you're no longer staying in Midrand, now you are living in Roodepoort or wherever, they'll say, please bring your proof of address. Why do you think that they'll ask you those things? They want to make sure that when they make amendments in their master file of the customer, they have proof and they've scanned it and they put it in. If you change your surname, now you are married, congrats. Now you need to bring the supporting documents that will say that it's no longer this person with this surname, there's a change in surname. Do you guys get what I mean? I'm just saying that agree and have a supporting document. If now, let's say, my credit limit is increased, that's an amendment inside the master file. They need to now have a credit application that's being approved that shows that there was an increase in credit limit. And that document is being signed by the specific customer. So it's a mouthful, but make sense out of it. Make sense out of it. Make example that, oh, this is like this. Oh, this is like that, if you could get what I mean. And then the third one, and then the other ones you guys will look at. The third one that I want us to look at, it says that enter only authorized master file amendments on the system accurately and completely. So it's just saying that make sure that your master files are authorized, which is almost similar to what we looked at. And they speak about the screen aids, guys. Here they are, your program checks, they are here. Your sequence checks, they are here. Your dependency checks are here. So I'm saying this because we're going to look at an activity that speaks about this. So maybe let's just go through this, bear with me, then we go to the activity where you guys will talk. So it says that rewrite the, this is just saying that the person must have an ID and a password to show that they've got access to the master file. And it must log the fact that, okay, there's a log of amendment of, this was manual, this is inside the system. There's a log of saying that there was amendment being done. And to enhance accuracy and completeness, you need to have the following controls: your screen aids and related features. These are your minimum key in of information. For example, when you amend a record, the user will key in what? Your debtors account number to bring up all the details of Ntebale. That's why sometimes when you think about it, insurance people say, what's your account number or ID? That is a minimum key in information feature. Makes sense out of what you are reading, right? Then thereafter, once that information is there, there's a screen formatting or a screen dialogue of saying, do you want to continue? Or is this the relevant person or whatever? So it's those yes or no. Those are screen dialogues between you and what the system is picking up, what you're trying to change. Then the account number of the new data will be generated. Fine, we're good. So those are screen aid. Then program checks needs to be there. This is verifying or matching checks to validate the data's account number against what's inside the master file. So the part where you've put in that key in information of the data's account, a program check would be validating that their data's account reconciles with what's inside the master file. If it's incorrect, you won't be able to get all the details of Ntebale. Then there's this whole thing of saying that the number that's been keyed in, is it in numeric or is it alphanumeric checks? There's a range. This is a range where now we're looking at the credit limit field. For example, your credit limit must be between 5,000 and 75,000. Nothing beyond that. Or there must be a term of saying that you're going to pay this amount within 30 days or 60 days. Guys, get it? Then there's field size checks, mandatory data checks to say that is it credit limit, it needs to be entered. A field size to say that this is the specific field number, or this thing can't move on without you filling it in. Then the sequence check to say that this, we said it even with hard copy, the master adjustment file is sequence, got a number to it that we can say it's document number, whatever. Then there's dependency checks. These are the credit limit granted may depend on the credit terms. A debtor is only granted 90 days terms in terms of days of payment if they have this specific limit, which is 2,000 or whatever. So make sense. I keep on saying this because it's important. Make sense of what you're doing. Make sense out of it. Try to visualize it. If you can't, use YouTube to see where would this work. So now it's time for you guys to talk. I've been talking for a while. Let's now talk about this. They say that for activity 8, describe the application controls that should be present to ensure that the orders received from customers are accurately entered into a computerized credit sales system. So now think about it. Think about Take a Lot. So now they're saying, how can we make sure that the orders that are made by everyone in SA, which are our customers, are accurately entered into the credit sales system? Okay. So for accuracy, right? Because they didn't say for occurrence, they didn't say. So I'm looking at the solution. The fact that they said that orders received are entered into, that gives you an idea that it's the input. Because remember, when we are looking at computerized controls, there's input, processing, output, then there's the master file. We touched on the master file, so now they want you to touch on the input part. So what are some of the things that you guys think are important to ensure that the orders that we receive from our customers are accurately entered into? Let's talk. Let's make use of an example of what I was saying. Take a Lot. So in Take a Lot, I'm trying to buy a food processor. How can you, what application controls would you think of that will say that at the end, I've ordered a food processor? What are some of the things that you key in, guys, when you're making an order online? Maybe let's try that.
So when you order from Take a Lot, then you're going to click on the processor, food processor icon. Then you immediately take you to the next part.
Okay, so clicking on that food processor, normally what happens? There might be a drop-down list or something, right? It's just that with Take a Lot, it will give you options of food processors. You would search, and then it says food processors. Then you click on that specific one. So if it's not an advanced internet platform, ordering platform, it will give you a drop list of saying, okay, you said you want food processor. These are the food processors that we have. There's Russell Hobbs, there's this and that. That is a control, right? To say that at least they are limited to what we've given them. Okay, cool. Another one, guys.
Yes, I would say that one of the controls that must be put in place is to check that it is the correct person ordering the whatever product is actually the person placing the order, and that it's not fraudulent. Sorry?
And how would you check that? How can we verify
with a username and password?
Username and password, right? person has access to the platform. How can we make sure that the orders that we receive are accurate?
At the end, when you actually place chosen your items and you say that you're done shopping, it like take a lot. It will take you to the second screen or the other screen where it will show you the final checklist of these the orders and the quantities, the items and the quantities that you want to order. That's the other check control that you can put in place.
Yeah, so what is that specific feature group? Guys, you need to know your features. Yes, Jason?
Is it a verification or matching check?
Okay, so it's a program check. You call it so I need you, yes, you are right, Jason. So I'm saying that know your features. I said this last week and I'm saying it again, guys. Know your features for the input phase, even the processing and output, but the inputting phase, it's mostly us, guys. So let's look, because I'm looking at the time. So the screen formatting. The screen will be formatted to look like a sales order document, okay? There's minimum entry. This is just to say entering an item code or the description, as I was saying with the food processor, there's that minimum entry that is required to say, I want a food processor. There's mandatory fields, guys. This is like saying, number of orders do you want? What's the quantity of the food processors do we want? So you guys might have the explanation, but you need to know what is that? Is that what feature is it? There's alphanumeric. I've mentioned, we literally were looking at the input controls just short now when you're looking at data's master file. But anyway, there's alphanumeric to say that the quantity field needs to ensure that there are no alphanumeric characters. So you can't say quantities B, you have to say 1. Screen prompts, are you sure? When you're doing take a lot, before it gets you to the part where you put in your banking cards and whatever, it will say, are you sure? Or when you're making your, even if when you're doing Mr. Delivery, guys, or there's always that, are you sure? You say yes. Excuse me. Fields on the on-screen sales order, which cannot be changed by the order clerk. So whatever, after you've done your order, have you ever gotten to a point where Mr. Delivery changes your order? No. So that means that order clerk on the behind can't make any changes. Or even with Take a Lot, after you've made your thing, it gives you your invoice, and it in no way within that pathway of you doing the order, where there are parts where they're saying that internal people office use, never see that. And then thereafter, as I was saying, that you will get something, that documents that shows that this order has been done. There must be a customer reference. It will tell you that this is your invoice number. Dwelling has made this this sales order. And this was only for accuracy. So you need to know input controls for occurrence. You need to know input controls for completeness. And very key, know what they do, know what they are, and be able to give an example. Very well, I don't know how much I can emphasize it. We are going to have a situation whereby we are, what's this thing? Whereby we are doing revision, but I need you, for that revision to be effective, I need you to have read, I need you to have, like, you must just know your story. Like, know your story, guys. Know your controls. Okay. Lastly, cash. Let's look at this activity. So this is cash sales. I think today we're only doing revenue because we still need to do a question from the previous assignments that I'd like us to look at, specifically at revenue cycle. So, excuse me, cash sales. Cash sales occur every single day in business entities. I think so far with the theft that's been happening in SA, most companies, or rather let me say most businesses, don't like carrying cash. I mean, like having cash sales. They'll prefer that. I'm saying cash by itself. People don't do that. But you still find companies that do that. Businesses, I mean, same thing. Cash transactions, as I'm saying, that they carry a high risk of fraud because it's not only theft, it's also a thing of fraud. It might be that, yes, you might have all the controls that you can have of saying that this thing must be banked daily, 2 people must open the cash register, whoever must review. But then the fact that you have to go to a bank, your internal guys can organize someone to just, because it's normally not them. It can be an inside job where someone calls someone from outside to say, okay, now they're out to bank 70,000 cash, and then theft happens. It's just that crime is everywhere, sadly. So, but you still need to know the controls around cash, because as much as you might try to run away from cash, you might find that there's still people who believes in holding cash. So you can't turn them away, because at the end of the day, you want to make profit, right? So know the stages of cash. It's in your textbook in terms of the minute that it's been received from the customer and when the goods are sold to the customer. Just know that process. Same thing as we've done for credit sales. Know the process. There's a process, guys. Then there's the risk part. The risk part is what we're going to look at in terms of activity 1. The risk, they're also stated in your textbook in terms of main one, as I've mentioned, is theft. Main other one is fraud. Because risk, and sadly, it affects small businesses, this risk, sadly, because they don't have the resources to have all this internal control. So businesses, if you are running a small business, most of the time you're just concerned about making sales, because I don't know if you guys run a business. You find that you are the accountant, you are the marketing person, you are the procurement, you are everything. So you hardly have a situation of segregation of duties or having enough resources to even hire people so that they can be able to implement these controls that we speak of. But it doesn't mean that you shouldn't have a system. Rather, start it right so that by the time that it grows, you know exactly who you need to employ and what is it that they need to do. So if you can look at job description, I'm just talking, this is not here. Say that with job descriptions, they normally, the task or the job role, they are normally orientated around controls. If you look at it, whether it's a cash, an ordering clerk or whatever, the tasks that they do are normally centered into the internal controls of the company. So if you look at that, you will see that that's what. So if you have a small business, the fact that you studied auditing, you should be able to know what needs to be there. If you can't afford it, you do what you can. But by the time that your business scales up, you can now know who do you hire and what is it exactly that they need to do to ensure that you minimize risk, because having a business is a risk in itself. Right. So activity 1. So activity 1 says that the following are few things that can go wrong with cash sales transactions. Okay. Number 1, okay, 1 to 5. Let's look at what the question says. The question says that you must describe. When they say you must describe, it means that you must identify and explain. So whenever, I'm just saying it's an exam technique, Whenever they say describe, know that you need to identify something and explain it. That's when you'll be able to get a full mark. Don't just identify. Identifying is just giving theory dump on the paper. So be able to apply yourself by explaining. So they're saying, describe the internal controls that could be implemented to mitigate the risk. So they're saying, identify the control and explain them how they will be reducing this risk. That's what it's saying. So let's look at number one. You are given the risk. So now it's the same thing as the previous one that we've done. You guys will start talking. So risk number one, cash sales could be recorded, but the cash not deposited. So cash can be recorded and dwelling bought an Albany bread for this amount, 10 Rand, making an example. It might be that at the end of the day, that 10 Rand doesn't click to a point where it gets into my bank account. That is what could go wrong. So identify for me the control and explain how will it help in this instance of minimizing this situation of having cash that's recorded but not deposited. I'm asking you guys, how can we minimize this risk, guys?
I would say that the receipts, the cash receipts, must balance back to the cash deposit slips.
Okay, so try to make an example for us. Yeah, I hear you. I just want you to elaborate. Remember, you're identifying and you must explain. So how can what you're saying? Yeah. I'm listening, Marika, sorry. Hello?
I'm here. Okay. Okay, Diana, as soon as you say you identify and describe, then I completely go blank.
Guys, you practice in here, right? So I'm just saying that you're saying this cash receipts must be reconciled to cash deposited. So I'm saying that, yes, I hear you, but try to tell me, how is that going to solve this situation or reduce the thing of cash being recorded but not deposited?
Okay, so basically I only did the identifying part.
Yeah, so I want you to explain.
Okay, that's right.
So someone can explain. What I'm saying is that make sense of what you're saying, right? Make sense of, yeah. I'm listening though.
So when the cashier,
yes, someone is pitching in.
when a cashier balances up the till, it will give you like an amount received for the day. So then you're gonna when you take so when the like a senior cashier cashes like each till, like balances each till up, they will take the amount and the total amounts that they like receive from that particular cashier, and then they will take and make sure that it balances to the amount received, the amount of cash in the till, and the amount of cards, credit card slips, whatever.
Yeah. So yes. So the cash in the cash register, because now we need to take it from that. You guys were both right. We're helping each other, right? To say that we first have to identify that there's the cash in the register. This needs to be reconciled with the cash sales for the day. So how would you know the cash sales for the day? It's from that receipt, right? The till roll in the cash register should not be alterable, so it should not be altered. So once you have neatly tied down the fact that there's a cash register that needs to be reconciled with the receipts, you should be able to monitor all the cash that is being recorded for the day. Because you don't want the situation whereby what's being deposited doesn't reconcile with what was in the cash register. Because might be that the cash that is inside the cash register not all of it will be deposited. So to minimize that risk, make sure that the cash register, the cash that's inside the register, it's reconciled with the receipt that's inside that row, and you can't change it. We always see it, guys, with even when you go to a Pick and Pay or whatever, you'll find them counting money or to say that you have this amount of cash inside and that. Then thereafter they take that, there's you see it. It's just that sometimes maybe you don't know exactly what they're doing, but then this is explaining that at the end of the day, they all take those cash, they take the roll. That's why if the roll is finished, they don't say go. Have you ever seen a situation where they say, no man, the cash roll is finished, so I'll just write it down. No, they make a big fuss. They'll say, all right, we need a new roll so that we can put it in here so that we can be able to keep, because at the end of the day, they do that reconciliation. I'm giving you another example so that you don't forget this control, okay? The next one, it says that cash could be received from customers, but the cash sales transactions, no, let's not look at that one. Let's look at number 4. Sorry, guys. Customers could leave without paying for goods taken. How do we minimize that one? Have you guys seen that? Probably. So what do you think they put in place for people who might leave with goods and they haven't paid for them? What controls can you have in place for such? I'm listening. Yes.
Can I take that one?
You may.
Yes, it's Pateka here.
Yes.
This one, what can happen is to have the securities, I'll make an example, at the exit to check the slips. I like what Macro is doing currently. Macro, they've got security at the end. They've changed their systems. They've got, they take your slip as you go out, and they've got a scan that can scan the goods to see if it reconciles to the slip.
Oh, wow.
They don't scan everything, but they do a sample. So I think that in that way, it can be avoided that customers leave the store without paying. I've seen Macro is doing it very well, but other shops have not implemented such.
That's a good one, right? So there's a security guard at the end, and they'll be checking what's inside the shopping bag and the receipt that you have. Macro now has a scanner to be able to choose a certain sample to see that whatever that you have, you've already paid for. Okay. I like that one. So the physical safeguard, I'm laughing because some companies, you find that they even have dogs to sniff on people to check if they didn't put any other goods on themselves. Because sometimes you find that, fine, you have a guard there's a limited entry and exit point. The people on the exit point, you see, even with Macro doesn't, I see it with Macro. They don't, your entry is not the same as your exit. Have you guys seen that? I hope you have. Your entry is not the same as your exit. So they've got that limited entry on block. And then now you can see that they even request the cash receipt. So I'm saying that some will even have dogs, but you don't have just dogs. I'm just saying small business that I've seen, whereby you might find a person who have a plastic bag, the goods are there, it reconciles with the receipt, but they put certain goods on themselves or in their bags. So that's where the dogs will be sniffing or whatever. You don't need it. If that's what you can afford, you have that. Others, they have those poles on the side. I mean, like when you are entering in and out at the shops, they will beep if there's a certain thing that still has a tag on it and it was not paid for. So yeah, that's an example of that one. And yeah, oh, nice one. This one, number 5. I'm just doing. I don't think we'll be able to do the question, but I think we'll read, and I'll give you guys as something to think of for our next class. Cool. So it says that an armed robbery could take place, resulting in cash stolen from the cash register. How do we mitigate that?
One of the ways that I've seen is that some companies limit the amount of money that cashiers can have in their cash register. So if the amount of money you have in your register exceeds 5,000 Rand, you have to leave about 2,000 in your cash register, and the rest you drop in the drop safe. And that's how some of them do it. Because if there's an armed robbery, they're not going to get everything. They're only just going to get that 1,000 Rand in your register.
I like that. Yeah, I like that. I like that. So physical safeguards should be in place, security surveillance, but that's not enough. I like that whole thing of saying that have limited amount behind so that you don't, or use two different, you don't get to a situation whereby they took everything. Okay. But at the same time, have civilian cameras so that people don't come in and then they take the money from the cash register and you're not even able to identify them. Have security guards to also be there so they can be able to intervene wherever they can. Right, so those are the controls for cash. Be able to do that for even, what's this thing? Yeah, we'll do 12 marks. I think we've got time. Be able to do that for each and every single cycle. Know the risk, know the documents, know who needs to do what and how they should do it. And what are we trying to achieve by doing what these people are doing? What's the fuss about all of this? That's your why. Then you'll be fine. So let's look at question 2. And then we close the class. Taola Pta Limited, hereby referred to Taolo, sorry, my bad, is a growing wholesale business specializing in distribution of beverages around the country. Mr. Molaudi, CASA, is the current finance manager of Taolo and believes that good corporate governance and internal controls will carry the company into the future. He has therefore asked his internal audit department to assess the different business cycles separately and report to him on their findings. As I've said, in most companies, internal auditors, that's why they are there, to make sure that everything runs okay, or make mention of things where there's cracks. Mr. Molaudi wants to improve the internal controls to provide him with absolute assurance that the risks that threaten objectives of the business are adequately responded to. So that's what he wants, and that's what controls are there for, right? So revenue and receipt cycle, maybe let's look at that one, because the other one we didn't touch. So Taolo makes use of a well-known standard accounting software package. This accounting system is fully integrated. Sales are made on credit to approved customers. So they've got credit sales. And they say only, so they don't use cash. The internal audit department is concerned that the controls relating to the granting of credit terms and limits to the new customers are not sufficient. So this is the feedback that they give, and they say that the concern that we have is that controls related to the granting of the credit terms and limits to the new customers are not sufficient. Question then comes, with reference to what I just read, describe 8 computerized and manual internal controls relating to the granting of the terms and the limit for the new customers. 12 marks, guys. So 12 marks, how you get how many minutes you must spend on this question. You say 12 multiplied by 1.2. That's 14.4, but that's 14 minutes for you to answer this. So keyword, why is it 12 marks? They say describe. So you must be able to identify the control and explain it as to how will it address their concerns. To say that their concern was saying that it seems like these controls are not sufficient. So tell us, what is it that they need to do around, what controls can they have around granting of terms and limits to new customers? So maybe you can try to break it down into one by one or whatever you mix it, but give us 8 controls to ensure that when it comes to the sales that we make to our customers, the granting of terms and the limits to new customers are sufficient. What are those controls, guys, that you can think of? Granting of credit terms and limits is just like with you making a credit application. What are those things that they make you fill in or they check before they grant you credit? I'm just leading you on to answer now.
Okay, can I take that?
You may.
They check your pay slip, they check your bank statement, they check the proof of residential, they check your credit bureau, and you have all your information, like your cell phone numbers and stuff.
And why do they do that?
To know if they're giving it to the correct people. And also, for example, for credit bureau, they check how you are paying other debts, if you have any.
And why do you think it's important that they check that?
Because for them to grant you a loan or a credit facility, they should have a guarantee that you'll be able to pay. Maybe you're not affording to take that loan because your credit score is not sufficient.
Yeah, okay, cool. And others, why do you think they check your salaries and also your bank statements?
For completeness and for occurrence.
Yeah, but a bit more. Try to give me more. Yes, you are correct. I'm just saying that with the salary and also with your bank statement, how does it achieve those things that you mentioned?
To say that you can afford it, your affordability status.
Affordability status, right? And also bank statements is just to make sure that whatever that a bank that you have a bank, they look at the activities within the bank statement and also just to make sure that they've got their correct account, right? And then, so with the affordability, they will know what limit that they need to give you. With the credit terms, they will know how many days of how long can you be able to pay this, right? Okay, let's look at the solution. What, 4 minutes? Sorry. Okay. 8. Okay. So, hey, and guys, we didn't mention, they said computerized. Question said computerized, right? Did you guys see that? They said computerized and manual. So we needed to make sure that those things are there. But next time, make sure that you have those intact. Don't answer the required. But anyway, So it says that regardless of how it's done, online or personal visit, a credit application must be submitted by the new customer containing banking details, trading references, and financial information. We got that, right? All of these details should be, all these details should be followed up with a credit bureau, which supplies an assessment of the applicant's credit rating. See why we need so that's why I was saying that be able to say why are you getting there, right? Why are you doing this? You end it with that whole thing of completeness, accuracy. I'm telling you, you get more than 1.5 mark. Online access to bureau site should be password protected. Passwords applied to Taolo upon registration and should be known to the credit controller. So now they're just saying that keeping this whole credit bureau thing confidential, they're being extra bit. A credit rating should be obtained directly from the applicant's bank. The company should have these following guidelines. The credit terms given, remember I was saying 60 days. You break down what they mean by credit terms. Initial credit limits, this should be reviewed by the relationship they've developed with the customer, right? Handing over a debtor who has not paid, amounts owing over 90 days will be handled by a credit agency, or any larger amount outstanding over 90 days should be handed to the lawyer. So this is when if you guys owe someone, they will tell you that, hey, you didn't pay this month. Okay, no, I'll pay next month. Hey, you didn't pay this month. No, I'll pay the other. On the third month, they're just saying, just know that this goes to credit agencies. You're just going to hand it over to them. If it's more than 3 months and it goes beyond, it comes to a point where they're saying they're handing your account to the lawyers so that they can be able to recover that amount that you owe. They say that the credit terms and limits must be agreed between the credit controller and the financial manager. So they should have a policy to say, how do they go about this limits and terms? On a weekly or monthly basis, the financial manager should extract a report to look at all the new accounts that have been opened and compare them to the applications that were approved. And then the customer needs to agree to the credit terms to say how often would they pay this. So you guys see that there's more to what we just discussed. Over and above getting those information from the new customer, you should say, okay, fine, we've ticked this part. Then what? What happens with the financial manager? How can we involve him? Who else can help us with recovering debt? Because having a credit sales, one of the biggest risks is, say, we're not able to recover the amount that we gave these people. So what are the controls around that? So what I'm saying is that from today, it might have been a mouthful. Try to practice and make sense. As I'm saying, that's why I'll lead you guys. It comes easier once you then have an example, you're able to apply yourself, then make sure that you answer the required. All good, guys. I hope you are. That's it for today. It was revenue. I thought that we'll be able to go into another cycle, but time.